So, as I'm sure a lot of you know by now, this channel I like to debunk common trading myths, and the one that we're going to focus on today is around time frames. There is no perfect time frame. There is no fantastic time frame you can use to catch every single move in the market. Such a thing does not exist. And if it did exist, it would be the only time frame out there. Everyone will be using it. But just ask yourself for a second, why are the Instagram traders of the world using all sorts of different time frames, ranging from the seconds all the way to the hourlies, the 4 hours, the dailies? Why am I personally using a 30-second time frame, but soon going to be changing to something like a 30-minute time frame? Why we have Anton, who is Ment, you can check out his links in the description. Why we have himself, who has gone from all sorts of different time frames, a 1 second, a 5 second, a 30 second, a 5 minute, a you name it, he's been through it. The point I'm trying to make here is that timeframes are not a thing. They don't exist, and there is no perfect time frame that you can use to do your trading on. However, if we flip that on its head, everyone needs a time frame that works for them. And in this video, I'm going to go through how you can find the time frame that works best for you and how you can use something called EVC, which is entry, validation, and context, to identify a certain three timeframes that will work for you to create a system that works from a fractal institutional perspective. So without further ado, let's just jump right into it.
Funding meant for traders. Ment Funding.
Cool. So like I said before, many traders believe there is a certain time frame that will be the best one in the world. A lot of the ones that you might hear are the 1 minute time frame, the 1 second time frame, the 30-second time frame, the 5 minute time frame, the 15 minute, the 1 hour, and the 4 hour. Those will tend to be the time frames that you hear the most, that a lot of traders think that you need to just know and you need to be using in order to be profitable. However, that's not always the case, and this video is going to show you why. So I want to introduce something to you. Some of you may already be familiar with it. So if you're part of the Ment community, or if you're part of the Mentfunding Discord community, you're probably already aware of this. Or even if you've gone through some of my other videos or some of Anton's other videos over on the Ment YouTube channel, check it out if you haven't already, you will know something that is called or commonly referred to as EVC. So this is the way that us MentFX traders view timeframes. Now, everyone's EVCs can be a little bit different, and I'm going to explain why. So first of all, let me go through what some examples of EVC could be. Okay, so we have E, we have V, and we have C. So let's say we have a trader who enters, bearing in mind E stands for entry, V stands for validation, and C stands for context. Let's say we have a trader who enters on the 1 minute time frame. In order to reach the validation time frame, we need to multiply that number by 6. Okay, so obviously as part of the MentorFX community, this does get a bit more complex, but we're going to keep it simple for the public YouTube channels. So you take your 1 minute time frame and you multiply it by 6, and that gives you a 6 minute time frame. Okay, and then to get from your validation to your contextual time frame, you basically do the same again, but multiply it by 10. So we take 6 and we times it by 10, which equals a 1 hour time frame. And already we have a system, or we have a trio of time frames that can really work for someone and can really bring true profitability to someone once they've created a system that works with these time frames. And I'm going to go into how you can do that next as well. So just as some other example, let's say we have a trader that enters on the 5 minute, and I'm going to go through in a second how you can identify the best type of entry time frames that will work for you. So bear with me whilst I do that. So again, we multiply 5 by 6. So what is 5 times 6? That is 30. So that is a 30-minute time frame, which is your validation time frame. And then we do the same again. We take 30 and we multiply it by 10, which is a 300-minute time frame. If I then divide that by 60, because obviously there is 60 minutes in an hour, that brings us to a 5-hour time frame. Okay, so 5 hours would be what your contextual time frame would be. Okay, so for the purposes of this video, we're going to be using a random number. Let's just think of a random number. Let's use a 22-minute time frame. Okay, 22-minute time frame is what I'm going to be using for this video. So 22 minutes multiplied by 6 is 132 minute as the contextual time frame. All right. And then we multiply that by 10, which is obviously 1,320. So times 10, and then let's divide that by 60 just to work out how many hours. So it's about a 22-hour time frame, or you can easily round this up to a daily time frame. There is not much of a difference between a 22-hour and a daily time frame. So you can add elements of discretion. You can easily change that to a 4-hour if that's what suits you best, but I would recommend sticking to this multiply by 6, then multiply by 10, and then developing your systems off the back of that and making relevant changes where appropriate for you. Okay, cool. So now we know this, what can we actually do with this information? Or first of all, before we do that, let me try and get you to understand how you can choose your entry time frame. Because obviously with these examples, you've noticed that I've always looked at the entry time frame first. So to identify the best entry time frame for you, you need to take a step back and think to yourself and just ask yourself, how often can you check the charts? Can you check the charts every 5 minutes? How long can you check the charts for every 5 minutes? So for me, for example, I can check the charts every 5 minutes and I can spend roughly, 30 seconds or a minute on the charts every 5 minutes. So that for me will be a good time frame for me. However, a 1 minute time frame, could I check the charts every 1 minute for example purposes? Let's say no, I couldn't. So a 1 minute entry criteria would not work for me. So that's already out of the park. Okay. Now let's say you work a full-time job, you work in a warehouse, or you work in a factory or whatever it could be, and you can only check your phone realistically once every hour or once every 4 hours. If we do the exact same exercise for a person who can only check their charts once every 4 hours, so we do 4 hours times 6, which gets us to a daily time frame. And then we do the same again, multiply that by 10. So 24 times 10, which is a 240-hour time frame. If we then divide that by 24, that brings us to basically 10 days. Or you could easily say you can look at a 2-week time frame as well, because if you look at a 2-week time frame, that's going to have 10 trading days within those 2 weeks. So a 10-day or a 2-week, it's going to show the exact same thing when you look at it on a chart. So this type of EVC criteria, entry, validation, and context, can work for anyone. And like I said, for this video, we're going to focus on this one right here that we've just randomly created. So now you know how you can create it. You surround it by how often you can check the charts. So if you are a oil rig worker and you can only check the charts once every 2 days, use your E as 2 days, use your V as 6 times 2, and then use your C as that number by 10. And then you've got your EVC timeframes. So it is basically as simple as that. And this really helps you view institutional structure and starts like forcing you to think in a fractal manner, because there's no point looking at just one time frame. Yes, you can build a strategy based off just one time frame alone. However, it's A, difficult, it's more work than it actually needs to be, and B, you're not getting an overall understanding as to what price is doing over a large sample size. And anyone who trades with one time frame, you might have seen, they could have YouTube videos, they could have their own mentorships, they could have their own TikTok channels or whatever you call them. And they could be looking at one pair one day, and then a week later they might say, oh no, that pair does not work for me anymore. I'm now going to look at this pair going forward. Okay. Now, stuff like that is not sustainable, it's not feasible, and it's not really consistent, and it doesn't bring consistent profitability, is what I'm trying to say here. However, when you're using EVC, when you're creating your EVC, you start off by looking at E and you think of, right, well, how can I use my entry time frame to identify a validation time frame and a contextual time frame? And then when you're in the real trading conditions, you're basically starting the other way around. So you're going to use C to start. You're going to look at your contextual time frames and see contextually, does your trade plan meet a contextual criteria? And I'll go into how I do it with this example here with the 22-hour or the daily. And then you're going to look at the validation. Once your contextual criteria has been met, so for example, once my criteria for a 22-hour or a daily time frame will be met, I'm then going to scale that down to a 132-minute time frame or a 1.5-hour time frame, 90-minute time frame, whatever we end up doing, it doesn't really matter. And then I'm going to scale that down to a entry time frame of the 22-minute once the validation criteria has been met. So to recap what I just said there, when you're creating and when you're initially identifying what your EVC will be, start off with E understand how often you can actually check the charts. And just because you can look at your phone at work every 5 minutes does not mean you have enough time to enter a trade, manage a trade, move your stop loss, exit a trade, check the news, forecast, all of that stuff. Be reasonable with yourself. Just because I can check the charts every 5 minutes does not mean that I have to or I should check the charts every 5 minutes. And just because I can check the charts every 22 minutes does not mean that I have to be doing that. So in this example here, just because I can check the charts every 5 minutes doesn't mean that I'm going to be doing that. I'm actually going to be using a 22-minute time frame and then validating that. Well, before going to a 22-minute time frame, validating that with a 132-minute, and before going to a 132-minute time frame, validating that by using contextual understanding on a daily or a 22-hour. So without further ado, let's head over to TradingView now and let's actually get into this a little bit more. So on TradingView, I'm just going to go to UJ purely because it's been a nice delivery and it's just going to be an easy example for me to show you guys. Bearing in mind, I'm not here to show you a trading strategy and I'm not here to give you financial advice. So if you think that I'm about to give you a trading strategy that could work in the live markets consistently without you doing any effort or without you putting any time towards understanding what it actually is showing you, then you're in the wrong place. I'm here right now just to show you how you can use something like EVC in a real life practical environment. So first of all, let's just make sure we have our EVC on here. So entry criteria is, oops, that did not work well. So entry is 22 minutes. Validation is, what's our validation again? 132 minutes. Keep going off it. Let's just go on the settings here. 132 minutes. And contextual time frame, oops, we'll get there in the end. There we go, 132 minutes. And context was 22-hour or daily. So 22-hour or daily. Okay. And I'm just going to very quickly zoom this in so you guys can see this a bit better because I know that was pretty zoomed out. And let's make the text size of this quite large as well. So we now know what timeframes we're using as a result of understanding how we can use EVC in practical trading environments in a correct manner, right? So for this example, like I said before, just for just for pure ease sake, we're going to use a daily as a conceptual time frame, and we'll use 130 minutes, so that'll be a 90-minute, aka a 1.5 hour, as a validation time frame, and we'll just stick to the 22-minute as an entry time frame just for pure example's sake. Okay, so on a daily time frame, I'm just going to rewind price purely to a random spot. So I'm going to hide all of price by going into here. I'm going to hide price. I'm going to hide this as well. Cool. And I'm just going to go back to a random area and price. I'm not going to look. I'm just going to stop there. And we are now back down to 2022. So I hope we can get to a 22-minute time frame back in 2022. But if we can, I'll reassess it. So let's open price back up and let's see exactly where we are. All right. So as part of my daily contextual understanding, bear in mind, a lot of the concepts that I'm going to use in this video example now is all based off the teachings that have been taught by MentFX. So if you want to head over to his YouTube channel, there is a link in the description. You can also access that channel by going to the Mentfunding channel and just hitting one of the buttons towards the middle that will show you his channel. You can also join the mentorship. It's a great place to be. I've been there since 2020, 2021, and it has honestly changed my life, so I highly recommend it. And once you become consistent with a strategy, it doesn't have to be that strategy, it can be any strategy. However, I hope you do use some type of EVC in your strategy. Once you become consistent with that, head over to mentfunding.com. Get yourself involved in a competition that will be ongoing, that way you can get yourself involved for free or buy a evaluation account. Take your time with it, pass the evaluation or pass the competition, gain the evaluation account, pass the evaluation account, get a Mentfunding trading account and scale it up. You can scale up to $5 million with Mentfunding, one of the highest, if not the highest out there in the industry. So let's head over back to the chart and let's actually look into how we're going to create a strategy using context validation and entry. So for context, all I'm going to be looking for my contextual understanding is a move up and a sideways movement And then I want to see somewhat of a push up. Okay, and basically my trading strategy is to get involved in this area of price here. So I like to get involved in this area of price wherever appropriate and wherever possible. I like to avoid this area of price here, and then I like to get involved in this area of price again. All right, so let's head over and let's actually look into that on a practical example. So here, for example, I would have ideally wanted to avoid all this area of price, get involved within, some part of here, maybe some part of there, and then probably avoid all this area, including the last bits of the impulse as part of the first ICI, which is impulse correction impulse. And again, that's another teaching that is taught in the Ment YouTube channel. And then I would have wanted to avoid the sidewaysness and then see a continuation up. And the idea of using a contextual time frame first is that you don't need to go to your validation time frame and you don't need to go to your entry time frame until your contextual understanding and your contextual criteria has been met. So all I'm looking for now is a bit of a sideways movement and then a beginning of a push up. And once that beginning of a push up begins to happen, that's when I'm going to go down to my validation criteria, my validation time frame to see if my criteria has been met, which is a 90-minute time frame. Okay, so let's go ahead and do that. So here right now, I wouldn't be looking at anything because basically price is going a bit sideways for me now. If I was to try and trade bullish on a 22-minute on these days, how far do you think I would have got? Probably not that far whatsoever. Bearing in mind, I'm also using the MentFX Premium Indicator and the MentFX Screener, which obviously is available as part of the MentFX community and the MentFX mentorship. However, we do have a free screener software or a free, like a bit of an analyzer where you can basically get a sentiment, that's what it's called, a sentiment viewer, as to where each pair or where a currency or where a symbol is heading. So if I head over now quickly, let me just load it up for you guys, 2 seconds. So this is our screener that I use on a day-to-day basis. I'll give it a second to load. And whilst it's doing that as well, I'm going to head over to, if you head over to the mentfx.com website and then you head over to more, you can actually press sentiment viewer, and this is available to basically everyone. So if I type in UJ at this moment in time, you can see that we are pretty much on a daily level, we are pretty bullish, and on an intraday level, we're a bit halfway. And the reason for that is that's looking at today's day, which is Friday, the 5th of July. However, obviously right now I'm in a backtesting environment, and right now we don't have the capability of doing that, but you never know, in the future that might be actually a possibility. However, as part of this, we have a more comprehensive breakdown as to each symbol and loads of stocks. I think we have over 800 different symbols right now in this screener, which is a outstanding amount of symbols, all broken down. And as you can see, when I search in USD JPY, we are pretty much bullish on all timeframes. Okay, and like I said before, that is basically how price is right now to this day on the 5th of July. However, we're in a backtesting environment, so I'll quickly go through the timeframes just so I can show you guys as well. So daily right now is in a reaccumulation, so that's going to be green on a screener. 12-hour is in a reaccumulation as well, so that is going to be green. 8-hour is in a, give it a second to load, reaccumulation. I'm looking down at the bottom right, by the way. 4-hour again, I believe, is going to be in a reaccumulation. 1 hour, so we'll go 2 hour first just to prove a point. 2 hour right now is in a, give it a second to do its magic and load up, but it looks like it's going to be, in a redistribution, and that's because of this sidewaysness that has started to form. And the 1 hour is in a probably a distribution, a redistribution confirmed as well, just due to the sidewaysness that has formed. However, when we look at the timeframes that we're going to be focused on, so that is going to be a daily conceptual time frame, a 90-minute validation time frame. What does the 90-minute show us? The 90-minute shows us right now that we're in a redistribution. However, we didn't even need to go to a 90-minute time frame, because when we look at the daily time frame, we already know that we're waiting for that bit of sideways movement before we see another push up. So let's just play it forward and see what we get. So we start seeing a bit of a push up. Is that enough of a push up for me to think that, right, well, is the 90-minute time frame now going to be more aligned? Well, let's take a look. Let's head over to the 90-minute time frame. And as we can now see, we are pretty much, if we give it a second to load up, going to be in a accumulation. Okay, a reaccumulation confirmed. And that is because price is basically, or the indicator is basically looking at all of this price and it's understanding that this here is just a longer term reaccumulation. Okay. Getting a very dry throat. Apologies for that. So now that my criteria has been met on the daily of seeing some sort of a sideways movement, which happened in this candle, this candle, this candle, and this candle, and then some sort of a clear beginning of a push up, which happened in this candle here, am I now happy to go down to a 90-minute time frame? Yeah, I am. What do I want to now see on a 90-minute time frame? Bearing in mind, I am teaching you a fractal way of viewing the markets. So we've done the daily and we understood that in order for us to take any trade on the daily or to go down to a 90-minute time frame, we wanted to see something like this where we had an impulse sideways movement and then a continuation or a beginning of a continuation, aka a fractal stage a fractal stage 2 into a fractal stage 1, which is sidewaysness, into a new fractal stage 2. We are now looking for that same thing on this time frame here. And lo and behold, what do we have? We have a load of sidewaysness here, more sidewaysness here, a push up, a sideways movement, and a push up, a sideways movement. So right now, what would I be looking for me to be happy to go down to a 22-minute time frame to see if I can get any entries? All I want right now, as part of my criteria and my system here, is basically a impulse, which is what we've got, a sideways movement, a bit of a push down to show a flush or to show a fractal reaccumulation, which if you reword that is basically looking for a 22-minute reaccumulation or a 22-minute stage 1, which is a more of a sideways type of movement, to then anticipate the beginning of a new push up, a new sideways movement, and then a push back up again. And my trading strategy either gets me involved in this move right here, or it gets me involved in this move right here, or it gets me involved in this move right here and then fails down and then fails altogether. Okay, so I've already avoided a couple of days worth of price action where it was basically sideways and an absolute mess, where my overall context is bullish. All right, so now we're on a 90-minute time frame. I'm now happy based on where price is for me to look for a 22-minute criteria to be met. So first of all, let's just play price forward a bit. Now we're getting that bit of a push down. Play it forward a bit more, and there is that push down that I was looking for, where we'd have something like this, so a bit of a flush on the lows, which is what I like to see. Now, if I zoom in, I'm purely zooming in so you guys on the video can see it better. However, in the live markets, I do like to look at the overall larger perspective. Okay, so 90-minute, I'm now basically happy with where price is. For me to go down to a 22-minute time frame, I want to see a triple M validate itself, and I'll show you what I mean by that in a second. So all I want to see now is a triple M. I think this will be a triple M like this, and then I want to see price begin to start pushing up a little bit. All right, so let's see price begin to start pushing up. There we go. So we had a beginning of a push up there. So now I'm happy to go down to a 22-minute time frame. So let's head over to a 22-minute time frame and let's see what the 22-minute time frame is doing. Well, we already kind of knew what it was doing because we had it identified on a 90-minute time frame. So we were already looking at what the 90-minute time frame was showing us, and then before we went down to the 22-minute time frame, we already knew that we wanted to see some type of flush on these lows, a push up, push down, push up, bit of sideways, and then an up move. So now, best believe, all I'm waiting for now is that bit of a sideways movement and then the up move. So all I'm going to be waiting for now, like I said, is the sideways movement to happen. And I'm basically, in this example here, just going to buy stop a triple M in a relevant position that I'm happy with, just for this video's example. And this video is not actually the exact trading strategy that I use. Obviously, I'm not going to give that all away on a public YouTube video, am I? But that is actually all available in the Ment private community over on the Wizard Materials channel or the Triple M Extras channel. All my videos are available there, and I normally publish a 1 to 2 hour video every few months as to where my trading is up to. So all I'm looking for now is a new 22-minute validation, which is what I have here as part of my triple M. And now all I want to see is a bit of a push up, some sort of a fractal ICI type of criteria, and then another triple M that I can buy stop after I can see that money has come into the markets. And what you'll notice is that on every single time frame, I was basically looking for the same thing. So here I've looked for the move down, now waiting for the push back up, bit of sideways, triple M, buy stop triple M, and off we go. That would be the idea of the trade. And I hope it turns out to be a loss, because I want to demonstrate to you that all trading strategies come with losses. So we have a push up. We have, I believe here, there we go. So we have a triple M. Okay. So right now, all I'm going to do here is I'm going to set my buy stop to the high of that candle, and I'm going to basically protect just under there. All right. And let's see what happens here. Let's see if we A, get triggered in, and B, if we get triggered in, let's see the stop get us taken out, and C, if we get stopped out, B, if we get stopped out, let's see if you get moved to break even, or let's see if we take any profits out of this. So that would have been a cancelled trade altogether, because it would have never triggered us in, because I used a buy stop criteria. So that'd be cancelled altogether. Delete that, and let's head over back now to the 90-minute. Why am I heading back to the 90-minute? Well, because my entry criteria has basically invalidated itself. So now I'm going to go back to the 90-minute time frame, and now I'm going to basically wait for the exact same thing to happen again. And as you can see, we are basically seeing a longer term sideways movement on the 90-minute time frame. We can always at any time go back to the daily time frame to have an understanding of where we are fractally as well before we go back to the 90-minute time frame. So what I'm trying to demonstrate to you here, guys, is that you can easily create a strategy using just this EVC method alone. All right. So let's actually see if we get a trade out of this, and let me share the outcome. Hopefully it's a loss, because I want to demonstrate that all trading strategies come through with losses. And if you want to continue the backtest after this, you've got the date here. It is the 29th of June 2022, and you can see what timeframes I'm using here. So we've had a new validation form. Let's see the beginning of a push up. Again, invalidated and then forming a new validation. Let's see the start of a push up. There is the beginning of a push up. Let's go down to the 22-minute time frame. I have to type that. And now let's see some type of a sideways movement on this, and then some type of a triple M, some money coming to the market, and then buy stopping that triple M yet again. Again, same thing on repeat over and over and over, using the same thing across all three time frames, the E, the V, and the C. Okay, that was not enough of a sideways movement, so that's not even a trade for me. Here is now the sideways movement that I'm looking for. There, I think, is a triple M. There we go. So there's a triple M. So I could either buy stop that, or I could wait for money to come into the markets. And by saying that, I would just want a bit of an impulse into the markets, a new triple M to form, and I can buy stop that triple M right there. So that's invalidated itself. A new triple M has formed, and it's basically gone from there. So let's see if it forms another one, or if it just goes from there. So it does form another one there. However, look how far up we are in price. We're a bit too far for my liking. Let me see where we are now back on the 90-minute time frame. On the 90-minute time frame as well, we're a bit too much. We're a bit too high again for my liking. So over and over and over, repeating the same thing on repeat, you can easily create a trading system that works for you. So let's see if we can get a triple M. There's a triple M. Now let's see if we can see a bit of money coming to the markets. There's a bit of money coming into the markets. Let me now go back down to the 22-minute. Well, it did kind of fail, but let's just make sure that we can see on a fractal perspective and see the money coming in on a 22-minute time frame again. 22-minute time frame, triple M's are forming, but I want to see some type of a push up. So we have a initial push up there, comes back down. Let's see if we get another triple M around here. Don't think we will, no problem. And again, it fails down, we don't take a trade, and that is completely fine. So just by me using the understanding of EVC and only moving down from the C to the V to the E when actually appropriate, that has probably saved me an amplitude or a plethora of losses. Okay. And This same thing can be done on repeat across all sorts of different time frames. I'm not going to keep on going through with it because I've demonstrated what I wanted to demonstrate here. I wanted to demonstrate how you can use EVC to stay out of bad price action and be more interested and get more involved in a good price action. You might have noticed when I was on the 22-minute time frame that you could have seen your entry criteria work here a few times, which is perfect. However, mine didn't, and that's also perfect because for me, I stayed out of all this weird, choppy price action. I could have took some losses around here. Yeah, I could have took a small win out of there, but it's probably not worth it. And I probably have avoided multiple losses out of here just by using the EVC approach. Okay, so heading back over to our Figma board, now we know how to use EVC. What I want you guys to do next off the back of this video is look at your so look at your entry criteria right now and ask yourself, is that entry criteria actually suitable for you? Is a 1 minute time frame entry actually suited for you? Is a 5 minute entry actually suited for you? Or say, for example, if you work as a taxi driver and you can only check your charts at once every 2 hours because you're obviously doing fares within those 2 hours, why don't you change your entries to 2 hours and look across multiple different markets? Because when a trader is trading the 1 minute time frame, they might not be able to look at too many markets. They might only be able to look at, say, 5 or 6 markets during the day on a 1 hour time frame. And then once they're on the validation time frame, they might have filtered that down to maybe only 2 or 3 markets. And then by the time they're on the entry time frame, when they're on the 1 minute, they may only be looking at one market, which makes complete sense. However, when you're doing that, if you're on, say, a 4 hour to a daily to a 10 day, there is no point looking at just 4 markets on a 10-day time frame because it could take a whole year, 2 years, or 3 years for your setups to perform or your setups to form. So if you're using the MentorFX screener and you have access to 873 different symbols, different stocks, different futures, different forex pairs, different commodities, different cryptos, all sorts of stuff. If you have your system where you can filter out conceptually sound markets on a 10-day time frame every single week, and then you look at your validation time frame on a daily perspective, then you know that every single day you might have 4, 5, 6, 7 different pairs that you can look at or different symbols that you can look at on a 4 hour time frame. Wait for your 4 hour entry criteria to form, and then take the trade on a 4 hour time frame. Or for our taxi driver example, on a 2 hour time frame with a validation of a 12 hour and with a context of a 1 week or a 5 day time frame. Okay, so going back to what I said at the start of this video, timeframes do not exist. Get that thought out of your head and start focusing on EVC. Entry criteria, multiply by 6 to find a validation criteria, add a bit of discretion if you have to. It's not the end of the world if you change it by a few minutes here and there. Multiply that by 10 to find your contextual criteria or your contextual time frame. Start off when you're in a live market, so when you're doing your backtesting on the contextual time frame. Look at your context, look at your 10-day time frame if you're on the bottom example. And then before you go down to your validation time frame, has your contextual criteria been met? So when I was looking at my trades, was my sidewaysness met? Before going down to the validation time frame. Then before going down to the entry time frame, has my validation criteria been met? Which again is the same thing. And then before going down to the entry time frame, has my validation criteria been met? Which is a yes. Move to your entry time frame, look for your entry criteria, take the trade. Simple as that. Just because you take your trades on a 4 hour time frame does not mean you need to be sat on a 4 hour time frame every single day of the week on every single symbol. It does not work like that. Just because you are a 5-second trader does not mean you need to sit on a 5-second chart every single day of the week at all times. It doesn't work like that. A 5-second trader, if we multiply 5 by 6, could easily sit on a 30-second as a validation. If we multiply that by 10, then divide that by 60, could easily be sat on a 5-minute contextual entry. So that means that they can easily be looking at a contextual time frame of a 5 minute. So actually they're more a 5-minute trader before going down to a validation of a I forgot what it was then, times by 60. And yeah, before going down to a validation of a 30-second, and then before going down to a validation of before going down to an entry of a 5-second. So use the timeframes to your advantage. Understand that timeframes don't actually exist. There is no perfect time frame. If someone says to you a 5 minute is a nice perfect time frame, it's rubbish. That it does not work like that. Timeframes are made to work for you. If you cannot set up your chart and look at the charts every 5 minutes, don't use that as your time frame. If you can sit on your charts every hour, don't use that as your time frame. If you can sit on your charts, or if you can check your charts every 4 hours, use that as your entry time frame, and then build your validation time frame, and then build your contextual time frame. It's as simple as that, and then test your system based off that. The other way around, wait until your context lines up, wait until your validation lines up, and then wait until both of them line up before you go down to your entry. Once context lines up, go to validation. Once validation and context lines up, go down to your entry, and then automatically you're already in a good place in the market for you to trade your entry criteria. It's as simple as that, and that's where I'm going to leave this video. I know this video has dragged on, but I really wanted to dig deep into this whole EVC and really show you guys what it means and how simple it actually can be. You don't need to be trading the Ment strategy in order to actually use EVC. You could easily trade support and resistance and use EVC in this method. And more likely than not, after you've done your testing, after you've done your due diligence, you'll probably find that you are actually really profitable using that alone. Once you've found your profitability, head over to mentfunding.com. Let's actually head over to there now. Head over to mentorship.com, hit the competition button at the top, and sign up to our most recent competition. Right now we have it looks like we still have our current competition ongoing, which is our June competition, and we have our July competition, which is going to be starting in 4 days. All you have to do is hit the register button. If it's been grayed out, it means you've either already registered, which means you need to check your email you have registered with. It will also, there is likely to be a chance that it might be in your junk email or your spam email. Have a look through that before you reach out to one of our support staff. You can reach out to our support staff by hitting the Discord button, joining our Discord channel, and raising a support ticket through there, and we will help you out on there. And once you've done that, go through the competition, go through the rules. If you win a evaluation account, you will have a chance to either take a $200,000 evaluation, $100,000 evaluation, $50,000 evaluation, or up until 12 plays, which is all the way up until a $5,000 evaluation. And then once you've done that, if you pass, or when you pass, because obviously you'll be using EVC with a backtested profitable system, you actually have the opportunity over time to scale to $5 million. This is something unheard of in the forex trading retail space, okay, or the prop firm space. It's not something that has been done very much before, and we are probably one of the first prop firms to actually do it. You can scale any account, even a $5,000 evaluation account, you can scale that all the way up until $5 million over time. And that is pretty much the end of this video. If you don't want to go down the competition route, you're more than welcome to jump right into some of our actual challenges. We do sometimes have coupon or we have voucher codes available. Head over to our Twitter channel, or head over to our X, I should say actually. Head over to our Instagram or check out our Discord. We will always share any current discount codes on those platforms. So that's the end of this video. I hope now with a solid understanding of EVC, you can take your trading to the next level, and then you can easily, over time, after putting in all the hard work, gain some funding accounts with Ment Funding and compound them, and basically scale them all the way up until a $5 million Ment Funding account. I hope you have a lovely rest of your day. I hope you have a fantastic rest of your weekend. If you stuck through to this part of the video, hit me a comment down below and tell me you've actually reached this part of the video by commenting what your EVC actually is, and then I'll know that you've watched the video throughout, and I really appreciate you for doing that. Subscribe to the channel, hit the little notification bell so you know when I post next, and I will catch you in next week's video. And there might be a few videos out next week, so definitely keep an eye out. I will see you guys soon.